the failure of crypto assets and criminal prosecutions surrounding FTX, which I think has been the most prolific thing to happen in the past maybe 6 weeks or so to crypto, reinforces the need for active regulation. Now, FTX is an Antiguan company that is regulated in the Bahamas, but its liquidation is being administered in the US. So immediately you see at least 3 jurisdictions. And when you look at the court filings, there are well over 100 different companies associated with FTX spread across the world. So FTX, Mt. Gox.
Sorry, yep, that's an important, obviously that is a really high profile scenario. I mean, it's not the first one, but perhaps the company that in the crypto space that has had the most far-reaching impact in terms of the number of people that have been inconvenienced in some way, shape, or form, or impacted, right? But the thing is that the Caribbean, as you pointed out, started down the road towards regulation even before that. So yes. My question is, so was there a particular incident that triggered this desire to regulate? Why not just leave it as is?
I think looking back to the context of AML, CFT, so anti-money laundering, countering the financing of terrorism, regulatory issues surrounding the offshore space, stretching back into the late 1990s, and that round of blacklisting from the OECD. OECD spilling over to FATF, spilling over to the EU, but coming back to the FATF in particular. Now, the FATF started recognizing the potential for the misuse of crypto assets with the use of offshore structures. And I think they sort of use the tax transparency initiatives to sort of springboard the need for regulation onto Caribbean governments. So there's an FATF recommendation 15 out of a report that they did on crypto, which suggests that regulation, or at least regulation by registration, should be mandated in Caribbean countries that are popular offshore centers, whose structures are used in the crypto space. So I think that was the impetus, and it only came to the fore maybe about 2018 or so, and then we start seeing legislative responses in the Cayman Islands in 2020 with their Cayman Virtual Asset Service Providers Act, which gives a framework for the registration of virtual asset service providers, and it also makes a series of consequential amendments to the anti-money laundering and countering of the financing of terrorism legislation to provide a comprehensive framework for the registration of virtual asset service providers, the types of crypto assets or virtual assets, and they use the term virtual assets very broadly because of the different types of crypto assets that can be deployed as a result of that. So just stepping back to the FATF guidance for a little bit. Now, the name of that publication, or the name of that set of guidance, was the Guidance for a Risk-Based Approach to Virtual Assets and Virtual Asset Service Providers, and that's recommendation 15. So under the rubric New Technologies, and it deals with the international standards on combating money laundering and the financing of terrorism and proliferation. So that recommendation, as well as the FATF guidance, was heavily pushed across the offshore world. And as a result of that, as we stated before, 2020, you see Cayman bringing in their law. Then we see the Eastern Caribbean Central Bank, or the ECCB, commissioning a consultant to make draft regulation or draft legislation called the Virtual Assets Act, which is very similar if not materially identical in most part to the Cayman Act. And that purports to be a model piece of legislation across the 7 member states of the Eastern Caribbean Currency Union. So you're talking from Anguilla in the north, even though it's an overseas territory of Britain, to Grenada in the south. But what we see is the politically independent states, member states of the ECCB, passing those laws and bringing those laws into effect. So we see Grenada passing it in 2021, St. Vincent passing it in 2022, Antigua passing it in 2020, I believe. St. Kitts and Nevis in 2021 and bringing it into effect commencing that law more or less immediately. They're now into their second amendment, I believe.
So if I'm following you correctly, Cayman was the leader. They were the first jurisdiction in the Caribbean to come out with something of some sort of.
Yes. And interestingly, BVI has not yet passed a primary piece of legislation. They've circulated a draft bill, which I can share on screen if desired. They've circulated a draft bill for consultation to industry. But what they've done as a stopgap measure is amended their anti-money laundering law as at December of last year. So December 2022, they've amended the anti-money laundering law, making any virtual asset service provider, they will need to maintain client identification procedures, keeping KYC, suspicious transactions. They need to have internal reporting procedures for suspicious transactions, the usual suite of things that a financial entity would have to do. But most interestingly is that in the BVI, as at December of 2022, any virtual asset service provider will be required to comply with the travel rule. And the travel rule means that any transfer, so the originating and beneficiary virtual asset service providers, you need to obtain, verify, and maintain complete information on that particular transfer. And intermediaries, you also have obligations to do that, to show inflow, outflow.
Okay, but does it also include like audit requirements? So, for example, the firm needs to be audited by a recognized practitioner, anything like that? Not
explicitly, but generally. So when I say generally, because you're under an obligation to maintain accurate accounting records for a minimum of 7 years or so, your registered agent would be under duty to ensure that they have either with them a complete set of records, or at your registered office or at your place of business, or even in electronic format, a complete set of accounts, which can be inspected by the local equivalent of the Financial Intelligence Unit or the offshore regulator. So in any event, that I think brings you within scope to be inspected at the very least.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.